Now, yeah, for the second video, as you asked, for crude oil, which is this one, the Fisher and the Supertrend as before is already added here. So I'll just get into the trades, which is if we look at right now, we had the Fisher change on the 13th of November yesterday, which is, and then we got the signal later yesterday as well on crude on the bullish side. So this is a good signal. It already has generated. This is something like a few percent, I think, 2% almost, with a risk of. Uh, this is a risk of close to 2%, close to 1%. Uh, so that's not a bad trade, but it's not finished yet. It might go higher, might even go lower as well. But uh, the point of the strategy is we don't need to worry about the directions. We don't need to worry about what the market is doing. We don't need to worry about anything else other than what is in front of us on the charts, because that is being done by the superintendent and the Fisher. What Fisher is doing is taking the 21 days data and putting into a sort of a cycle of trend, where the markets are, which side the markets are. And what Supertrend is doing is taking last 10 bars of data, which is very fast. 10 hours is a small time while trading something like crude, like natural gas, or the indices. It's a very small time. It might not work as well in the on the forex side. I saw you saw shared some charts. It might not work as well as forex, because forex generally is not that smooth. There is a lot of noise in forex, so we need to smoothen it out a bit, trade it a little bit longer term, then it might be better. But while we're talking about like oil, it, as you can see, it's really good. Also, the futures to cash to CFDs or anything else, any type of instrument, the price doesn't really matter. As you can see, this is the same price action going on the futures, but we don't have live data on trading view. That is other than the normal purchase, you have to purchase each data separately as well, for the stocks, for the futures and other markets, OTC markets, that is. So going back to that trade, it's pretty simple. It's not closed yet. It will be only closed, like I said, at the juncture when this uh, mm, support is broken. So it's it's this support is broken. So when the price moves up, the factor that is controlling the smoothening of the super trend, it will automatically take it higher as well. So if the price is higher, the super trend would be automatically adjusted to a newer level, and your support, then your like exit, then would be that. So it's like it's an automated like trailing stop loss going on for you, uh, and if there is a trader to follow it, it's really good. Now let's go to maybe another example which didn't work as well. So this is the short trade, which obviously didn't work very good. But like I said, these the super, as you can see, the Fisher is very bearish for a long period of time. If we go back to This has been this way since 24th of October. So the trend has been going on for a long time. We got a bearish signal, it doesn't work, and we get swept off. So in this case, we get stopped out at about a percent. It's fine. The opportunity might have been there, might not have been there. Uh, but like I said, it doesn't really matter because we can't can't like pick and choose and in the strategy, because if we do that, then the strategy, the whole thing falls apart. The logic of the strategy falls apart, the smoothing is falls apart. It becomes dependent on us, not the strategy. Yeah. So mm, again, yeah, like I said, the stop loss will always be contained because it's every time it's being smoothened in a Bollinger Band sort of way. If we add the Bollinger Bands here, we will see that mm, if we make this SMA 10 and on the visibility style, we remove the basic level and the scale, everything same. uh, the second standard deviation is always getting updated. It's always getting updated, like the super trend. If we look at closely these levels, the super trend levels always tend to adjust accordingly. Sometimes the standard deviation, if the price is stable, it doesn't work. So in these 10 bars it doesn't work, but the super trend holds on, the smoothing holds on. So it's actually better at cross periods like this than the Bollinger Band itself. So that is why we come here and uh, to the super trend. So that's these are two trades that are explained here. uh, Again, like I said, there is another style of trading, another style of entry, which I showed in the natural gas video, that mm, we can take from the supports on resist or resistance if the super trend if your fisher is not like yeah, it's on your side. If we didn't have any trades prior to that, we had obviously the trade going on. If we didn't have the trade, our one entry could be here, because it's visibly close to that mark. And mm, we already have an established bearish fissure. So in that case, your trade would start here. Your losses are very small, like 4.4%, and we could have made like 2.8% or something like that. Even if we closed at the signal close, it's 1.7%, which is more than four times the loss. It's really good in a small amount of time. It's not that long, maybe one day. Okay, so this is pretty much it for the oil as well. Kindly let me know if you have any questions, and I think I have succeeded in explaining this as much as I can. uh, uh, and, and I'll be open to any questions as well. Thank you.